Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for Meta Platforms Incorporated, stock ticker META. So as we can see here, the price chart is starting to show some evidence of recovery here. As people that have been following these videos might know, we've sort of inverted the outlook here a bit. Previously, we were looking at the prior dominant trend move, which was seen in the positive direction, but recent developments here and the recent declines in the stock have done so much damage to that prior chart that it really doesn't make much sense to continue looking at this to continue looking at this upward price move as the dominant, most influential price move. So we've had to sort of invert the outlook here and start to look at retracements in the other direction. So in this case, if you're in an uptrend, the retracements would be moving lower, but in this case, they're going to be moving higher. So here we can see that currently we're starting to, we're getting some price gap activity here to the top side. And we have now broken through the 38.2% Fibonacci retracement of this declining move. So just to sort of re-summarize here, the price move that we're looking at right now would be based on the prior all-time highs, which came in at 542.96 and posted on July 8. As we know, the stock reversed sharply lower after this in a very surprising downside price move. I don't think anybody in the market was really expecting this type of an excessive move to the downside, and it did occur, immediately following all-time highs. So if we're looking at this price move at the upper end as being just short of 543, we can then extend this downside move here all the way to the price lows, which would have been seen at this would be 459.12, which posted during the July 17 trading session. So if we're using this as the dominant price move lower, we can now see that prices did fairly quickly manage to break through this 23.6% Fibonacci retracement, which came in at this would be 478.58. So just below 478.60. And then we can see that, there was a bit of resistance here, which started to develop at roughly 486.20. And then we did see a price gap here to the top side, which did ultimately force prices through that resistance level. So we'll just kind of drill in here a bit, sort of look at this more recent price action here a little bit more closely. So currently, we can see that there is another price gap here, and we're seeing a lot of these. I mean, this, it's just weird because we're also starting to get into tech earnings season. So that's another environment where you can start to see more price gaps, and that just leads to really volatile trading activity, where whipsaw price movements can be seen in both directions. It just makes trading much more difficult, and it becomes much more important to remain very, very much aware of the price levels that are seen on these charts. So it becomes much more important to do this type of analysis. So as we can see here, after we did manage to gap to the top side here and break through these resistance zones just above 486, we can see that we did see a drift here above this 38.2% Fibonacci retracement, which came in at 490.87. So we're back into important territory here, because you can remember maybe one of the major breakdown zones here came in as the stock broke below its prior lows at 493. This is important here because we're starting to see these price highs move back into that area. In many cases, you'll start to see prior support zones work as resistance if they're retested again from the top side. So the possibility that we could start to roll over here and move lower once again is a very real possibility. I don't exactly expect that to happen here at this point, but it is something to watch out for. So currently, what we're facing here is a resistance zone that is defined by these two exponential moving averages. I can move in a bit closer here. So here we can see that we've got this declining purple line here and a declining blue line as well. This purple line is the 100-hour exponential moving average. The blue line is the 200-hour exponential moving average. So, and as we can see here, we did previously get a downside cross. It's a little bit difficult to see because there's so much color on this chart at this point. But we can see here that the purple line is crossing below the blue line, which is a bearish signal. Shorter term moving average crossing below a longer term moving average is not a positive signal. So we did have that event occur. And now as a result, we're sort of seeing prices run into this level and have a bit of difficulty here. And we're honestly starting to kind of roll over a bit here. So, you do not, if you're long the stock, you do not want to see a major price failure in this area. Just for those few reasons that I just mentioned. One is that this area was a prior support zone, which would now be expected to work as resistance. That's number one. And then number two, we've got this downside moving average crossover. And then now we can see that share prices themselves are running into this area and are having a very difficult time breaking through. All of that said, on the positive side, we can see that this rising yellow line here has remained supportive here. This is the 20-hour exponential moving average, so it's a shorter term trend line and moving average. And we can see that the stock has managed to find some support here. So overall, what we're really looking at is the fact that the share prices are currently caught inside of this exponential moving average cluster. It's almost like sandwiching the price action itself. We've got some upper price levels and some lower price levels that are being caught inside of this trading range. So we do need to see a decisive break here one way or another. We need to see either prices finally break below here and then start to fall to new lows, or we need to see prices break above these two lines here, this purple line and this blue line, and then we can start to see a more significant retracement to the top side. Overall, we have seen some Fibonacci levels already start to break, and we have moved above that 493 level. So on balance, this is starting to look encouraging, but there are some factors here that will need to continue to be watched, especially because we're getting into tech earnings season, and this is the type of environment that could lead to major price swings in both directions. So here's the current market analysis for Meta Platforms Incorporated, stock ticker META.